Hi, ladies and gentlemen. This is Dr. Greg McLeod from Elite Traders University with Bulls versus Bears, the weekly Forex forecast. And let's get right to it. Awesome. I'm going to take you to my number one trading tool. And let me go ahead and share my screen with you. And let's go ahead and get right to it. Okay. And here we go. All right. This is my market heat map. It's a range of currency pairs by percentage change. Tells me what's hopping, what's popping, what's dropping, what's not, and has a lot of great tools such as different heat maps for different currencies and indices, and also trading tools like charts, Forex TV, financial news stream, a technical screener, and Forex calculators, liquidity, volatility, and tutorials and videos to help you trade better. Okay. So let's go ahead. We can actually go to the front of the heat map, and we go right to our economic calendar. And we're going to have on Monday, we're going to have Westpac Consumer Confidence at 8:30 p.m. So the Australian dollar is going to be in play. We also have Consumer Confidence Index, the RBA meeting minutes, as well as Chinese industrial data. All that's going on Monday, May 15th. So the New Zealand dollar, Australian dollar, and the Chinese yuan will be in play. We don't trade the Chinese yuan, but the Chinese data will influence the Australian dollar and also the New Zealand dollar. Also on Tuesday, we have UK data. We have employment data coming out. Employment rate is going to be unchanged at 3.8%. Claimant count change is going to fall from 28.2 thousand to negative 15,000. And so that would be it might be bullish for the British pound. We're also going to have at 5 a.m. We're going to have some Euro data. The ZEW economic sentiment survey is supposed to fall from 4.1 to negative 5.5. And then we have 8:30 a.m. We have Canada inflation rate year on year, supposed to fall from 4.3% to 4.1%. Could be bullish for the bearish for the Canadian dollar. We also have U.S. retail sales. That's the big one coming up. Supposed to increase from negative 0.6% to 0.7%. That's a huge move. Over 80% of U.S. gross domestic product comes from sales, retail sales, and the U.S. consumer. If it's on the mend, it's going to drive global growth. So that's why all eyes are going to be on U.S. retail sales number on Tuesday, May 16th at 8:30. We had some Japanese data, GDP growth annualized, and also GDP growth rate quarter on quarter, all supposed to be positive. I usually ignore Japanese data. Japanese they have basically 200% debt to GDP, and they have to basically just weaken their currency continuously in order to keep things moving. So good data that would normally make the yen stronger will be counteracted by the Bank of Japan. The minister of the Bank of Japan gets up, presses the button, and prints more money. The whole goal that the Bank of Japan is doing is print as much money as possible. So all the rumors of the yen increasing are rumors. They're not going. They increase the yen and cause the yen to appreciate, it'll cause their whole export economy to collapse, which you probably don't want to do. Okay. So probably it's a given that Aussie yen and pound yen and dollar yen would appreciate. That should be pretty much of a no-brainer there. Wednesday, May 17th, we have U.S. Building permits. Supposed to remain flat, 1.43 million. Building permits are like a leading indicator to future growth in buildings. You have to pull a permit before you start building. And if they're not pulling any permits, then they're not going to build as many things, probably because a high interest rate environment makes it unprofitable to enter into these transactions. And so that could impact the US dollar and the euro specifically, because the euro is the anti-dollar. And usually we want to trade US news, you want to trade the euro. Balance of trade, Japan, again, another piece of Japanese data. All they're going to do is print more yen. Okay. Thursday's kind of interesting because you have a 7 p.m. Asia session, a UK announcement being released, GFK consumer confidence, supposed to rise from -30 to -27, still negative, but releasing that data during Asia when UK markets are closed is interesting. Inflation rate out of Japan year on year, unchanged at 3.2%. Fed Chair Powell's speech on Friday is going to be very, very interesting. In fact, I would say don't trade it, stay away, encourage a friend, visit someone, go shopping or go to the beach or meditate, read a book, do anything but trade on Friday, because this is a real wild card. We know what he's going to say. He's going to say inflation is bad. We have to not be vigilant against inflation, which will cause the market to go nuts, and you'll be on the wrong side of the trade, and you'll be mad because you lost all the money that you made during the previous part of the week listening to this guy. Okay, so Friday, 11 a.m., stay away. That's all I can say. All right, let's go right to the technical picture. Let's start with the monthly chart. We're going to go to the US dollar index, the DXY. We're going to go through this real quickly because we've seen this chart. It's been moving sideways for the past 4 months, but it's a very bullish pattern. Monthly chart, we're sitting on support, a very strong support. We go back to a weekly chart. We just broke out of the box. We got a big bullish engulfing candle breaking out of a narrow NR4, NR5 kind of pattern, narrow range and a breakout. And so bulls versus bears, we are bullish the US dollar, but just not today, maybe tomorrow, Monday, turnaround Tuesday. We see the dollar is going to hold the key to a lot of other currency pairs that we're going to look at. We can go down to a daily chart. We can see that we are on our way up, but maybe taking a little bit of pause before we break out this trend line here. 4-hour chart, you can see that we're probably going to turn down a little bit off this trend line before breaking out. And that will give us, some things like gold and some other things to move a little bit higher. In fact, let's go to the euro, which is the anti-dollar, EUR/USD, and we can see that we're going to see a rise in the euro monthly chart. We rallied up against the 110.73 area, and but I'm looking at the weekly chart and maybe seeing a little bit of a rally, short-term rally in the euro. And then maybe later on in the week, maybe more bearish, maybe back toward the 105.26 area. Just because we're at this really crossroads in the market where we have a harami, a bullish reversal pattern, and we've been declining for the past several days, and we might see the euro actually come up for air for tomorrow. Manic Monday, turning around Tuesday, it'll go up today and then down. Might see the same kind of thing going on with the GBP USD as well. The UK, see we have harami against support, monthly chart. You can see that we have basically we took a break after hitting as high as the 126.79 area, and then we're looking at a bounce from this area, maybe back toward the 126 area on the pound. So bulls versus bears. I'm short-term bullish the pound, but maybe longer-term bearish. Okay, let's go right to AUD USD. And we got the Westpac data coming out. And then we got some support lines on the weekly chart. We're bouncing off, and we could probably hit back towards the 6,900 area. We've got a lot of support that we're hanging around in, and the dollar maybe taking a little bit of a breather before it starts pushing higher. Selling may go away, may have a rally up, and short-term rally up to 6,900, and maybe maybe a push back down to 6,200 after we hit that area. Okay. Let's go ahead and moving right along to gold, XAU USD, and we can look at gold. We had nice off a monthly chart. We rallied up to 22,081, and now we're pulling back, trying to get that line in there, right? Right. We pull back. We have a very strong uptrend, and so any pullback we see in gold is going to be a buying opportunity for a bit. So let's go down to our weekly chart, and we have a nice uptrend here. Maybe go down daily chart. Yeah, and this is looking very bullish. We're looking for bulls versus bears, short term, medium term, bullish on gold. Maybe a retest of that 2081 area. We're currently trading at 2019.25. All right, we're going to keep it moving, keep it spicy, and let's go ahead and move right along to. We looked at the USD CAD. We have some Canadian inflation data coming out, and we can see that we have a downtrend, lower swing highs and lower swing lows, and that's but we also have higher swing highs and higher swing lows. So you have a convergence of uptrends and downtrends together that doesn't give us a whole lot of but we can see that dollar CAD, like Canadian dollar, may be strengthening. We might get some higher inflation out of Canada. They're probably not far along the rate tightening cycles we are. So we see the Canadian dollar pull back short term, or actually Canadian dollar rally against the U.S. dollar. But we still have kind of an uptrend here, but I am short term bearish, medium term bullish. Then we bounce off that trend line and probably hit back higher. Let's go ahead and look at the S&P 500, SPX 500. Take a quick gander look at that. Monthly chart. I mean, this is bullish as you want to get bullish, higher highs, higher lows. We're extending the longest bull run in S&P history, and we continue to make higher highs and higher lows. I'm sure there's opportunities to go short, maybe on a very short, like scalping kind of move, but the tendency is up. So you want to, try to look for. I mean, look, we're bouncing off of support. I think where guys make a mistake is they try to time this and then they get crushed because the momentum is up and there's more green candles than red candles, but they try to make a quick hit and they get crushed, right? So let's go down to a daily chart. You can see that, yeah, you see a couple of red ones, yeah, but if you took the green ones instead, you're in the direction of the trend. So we're bullish. S&P 500. We are bullish. And let's go NASDAQ 100 and NAS 100. We'll take a quick look at that. And boom, we have maybe a rising wedge, making some higher highs and higher lows here. And it's extremely bullish. I mean, if you go to a weekly chart, I mean, this thing is skyrocketing, right? We have an old high back here that hasn't been tagged in a while. It was the old high from August 15th or so. And so we might have some more bullishness to go. But it's the sell may go away, so it may just be a quick flash and then maybe some big catastrophic pullback, profit taking as we hit some old resistance here, 13,734. Okay. And let's take a look at the dollar yen, USD JPY. Now, US, nice, lots of support here, and maybe a little bit of a pullback on the daily chart. We see that we double bottomed at the 3360 area. We can probably make it to 3777. That's like 180 pips away. Bulls versus bears. I am bullish dollar yen. Okay. So we I think we pretty much got everything covered. And guys, I want to thank you so much for being with me for Bulls versus Bears. Sorry to get out to you so late. I wish you much success this week, and make sure you like, subscribe, share this with a friend. If you found this helpful, give me a comment what you want me to talk about next. And again, I wish you much success. And if you want to, if you think you're ready for professional training or coaching by me, then you can go ahead and click the link below and sign up for a breakthrough strategy call so we can get some clarity about where you are in your trading and where to go next. Okay, and we can show you what we're doing and see if it's if you're interested in working with me on an ongoing basis. Okay, Dr. Greg signing out. Talk to you soon. Peace and pips. We're at the Elite Traders University. Check us out. EliteTradersUniversity.com. We have a free ebook. We have a free masterclass. Lots of free resources for you. And we wish to see you on the other side. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!